is Julie, and I'm going to walk you through baby steps understanding how to use these custom ranges to develop strategies using shark indicators, Bloodhound and Blackbird. This is what I use with the NinjaTrader platform. So this is only available for NinjaTrader 8. And so what I can do is take these custom ranges that I can develop, put a bell curve on them, and trade in and out of these distributions. So very simple theory, and for instance, if we know what an RTH range is, or a daily range, we can position ourselves in the market according to the volatility, whether it is low, medium, or high. Low for 1, medium for 2, high for 3. And we also know if our range gets broken, so say the price gets to our range but keeps going, we also know where to go, right? We go to the next level and or move up in the progression. We can move from our different custom time series up the ladder to get to the range for the day. And if we break that range for the day, then we know that we're in the tails and can use statistical levels to measure those as well per different time frames. You can create any number of distributions that you want. Very commonly, markets will use 60-minute distributions, and that is a very good one to start with so that you can understand how they flow in and out of that distribution with our edge, which is the slope of the PT2. So that will tell us whether we're moving like off a bottom with long vol, very strong signal, and you can trade to your ranges if you know what those are. So the daily range for medium vol was 318 points. So if you draw with your ruler from the low to 318 points, you can see where the range is. That's where I put the pink line. That is your statistical level for the daily range, PT2, for medium volatility, which it was. So it met the range. It met full PT2 of the range, and then it sort of flattened out. So if you know, and you can break this down, like I said, between the 60-minute range, the 1-hour IB, wherever you are trading inside that range, just using a simple 15-minute range, custom 15-minute range on the one. So I constructed a Blackbird template just using the PT1 of a 15-minute custom time series without anything else really, except for that long vol. So if the vol is going long, above 17, a threshold, we can enter one contract. If this profit target gets hit, we can enter a second order with two contracts, because the theory being you're going range expansion. We're only going to the ones, right? The easiest, lowest hanging fruit. So throw another contract out there with 2 on it, double it down, trying to get to that 68, 34, 34, 68. So with that and that only, you get some really good results just straight out of the can. Very high net profit, a decent profit factor, 224, a very good percent profitable. But the downside is, and what you have to understand is, there were 11 maximum consecutive losses. It has a 1.42 win-loss, average win-loss, but you can see that if you get that 11 in a row, it can be very costly to hold this strategy, to hold through some drawdowns. It does correct itself and come out ahead more times than it loses. But there's ways to get this more in a reasonable line. This is trading way too much. There are 31 trades, almost 30 trades. So per day, that's a lot. So it's just trading on practically all the bars. So to fix that, so it's not so deep of a drawdown, you can use your own logic, build your own strategies using PT indicator and these other indicators you may have, and which is what I did for my algo. And just to give you an idea of what can be done, I'm using individual volatility thresholds per order set. So instead of just one order entering for a PT1, I can say that that PT1 must be in low vol, right? If it's medium vol, I'm going to want a PT2 and a different higher PT1. And then if it's a high vol, I can tell it what percentage I want a higher volatility to go to, wider ranges, profit targets, and stops. And then I can take a pullback entry. So if we have those wider ranges, even though we're going directionally, I can, instead of exiting a trade during that pullback, that's where I'm trying to enter, right? So I can pick up at these statistical levels going into the pullbacks and then add that second order on if the first profit targets got hit, but again, with keeping that the volatility must be in my threshold, low, medium, or high, so that I can know dynamically whether to go to 1, 2, or 3. And so all these are phantom orders canceling these order sets. The way Blackbird runs is you'll have you'll be telling the software to get ready to do something on this order set, but if another order set 3 stop loss gets hit, this is just still hanging out there, and your platform is going to say long pending or short pending, and it's not going to take any of the other orders that are firing off until that's cleared. So you have to create these phantom orders to clear your prior instructions should a different order set get executed and the software still thinks that it's waiting to execute that other leg. And so that flattens all the outstanding orders that may be out there. That's the reason to put those phantom orders up in there. But that's getting a little bit into the weeds. There is a video on this that Zach put up there for you. I can point you to it if you have any more questions, but I can show you how to put your phantom orders onto Blackbird so that your order sets won't be sitting out there hanging in infinity, waiting for a signal that's not coming because the other order got executed. But so my initial theory of taking this fantastic net profit, I was able to get that down. The net profit was cut in half, but I used a higher time frame to limit my trades, and I increased my profit factor exponentially. It was at 7 yesterday. It came down a little bit. Percent profitable, just outstanding, and that maximum wins and losses greatly improved. 4 losses maximum together in the 150 days. So many more wins and losses. This is much easier to trade, more balanced, and it is incorporating that customization that you can put in there for if it's low volatility and here are my volatility threshold levels. I'm going to go for the low hanging fruit, the PT1. And if it's in medium volatility, I'm going to go for the 2. And if it's in high volatility, I'm going to go for the 3. And how do I know to go to those? Because I can make the threshold of the volatility only be going long to take these. And then take a retracement. Like I said, if you're going long vol, it's going to be pulling back. But instead of exiting, that's where you need to be firing off new second orders going in, sort of like that martingale technique that I've been trying to roll around in my mind using doing just this. If you are in high vol, go for a deeper pullback. If you are in medium vol, go for the middle pullback, and if you're in low vol, just go for the first PT1 pullback. So between the pullbacks and the market orders, that's where you can really start seeing that there's something to be done with the base of this strategy. And again, that's just using one time frame and not even telling it stop trading at the end of the range or distinguishing whether you're in and out of the daily range or outside, going for those outside tails, because there are certain times when the market is, expanding the range, going for those real deep, pushes outside of a range that you can make the most in, your trading month or your trading quarter during those outliers. So having different strategies just to trade the outliers is something that it's also able to do. And I can show you how to do that in a different video. But don't get excited just because you have this template and saw that big number. It's very difficult to trade. You would want to put this in a micro account at the very least and realize that you're going to be trading, almost every bar. It's just going to make your broker very, very happy. So try to improve it. Yes, you're going to, diminish your total net profit, but you're going to have a much smoother equity curve and ride, approaching the ranges like that. All right, guys, let me know if you have any questions, and we will talk at you soon. Just, sorry, one last thought. Just realize that we can put this on any market. So crypto, forex, energy, fixed income, equities, metals. You can always have a different market analyzer set up per asset class and then throw your asset class instruments in there that are already, defined. You can define your instruments that you want to put in there and run these ranges automatically, knowing at a glance where you are in these markets and what to look for from the market open. Where are your daily ranges going to be up and down? And that will give you a huge amount of power just going to the daily one. Draw the daily one from the open. That's your first low hanging fruit. You have that right here. So definitely just be aware of what these points and ranges signify and how to use them. And we'll talk at you soon. Thank you. Bye-bye.